Hello and welcome to Crypto Weeklies. In this video, we are going to have a deep dive on Algorand and its token Algo. We'll be conducting machine learning based price forecast, regression analysis, and accumulation strategies for Algorand. None of the content is financial advice. We are currently looking at a sizable rally in Algorand and its token Algo. Over the last 24 hours, this crypto has been rallying by about 24%. Again, a healthy rally thanks to the recent news related to crypto taxation and taxing crypto based companies in the US. Again, over here you can see Algorand could benefit from potential US capital gains tax exemption on cryptocurrencies which are based out of US. Again, this is still in works, but again, the market has received this news well. You can see the other cryptos in this list which are factored in this US based crypto list is again Cardano, its token ADA, XRP, as well as some of the other cryptos such as XLM, and I think one more that we covered in our video today is HBAR. Over the last 24 hours, definitely Algo has been gaining a lot of ground. Still, the market cap is slightly above 1.5 billion. The volume is almost one third of that, at around 466 million. This particular crypto has a max supply of around 10 billion, out of which 82% is already in circulation. That means going forward, the impact of any token based dilution would be minimal. You can see this is the price chart of Algorand and this is the market cap view for Algorand. That means all of the gains that Algo potentially achieves in this market cap should be reflected back in the price of Algo token because the circulating supply has reached its critical threshold of about 65%, above which the impact of dilution is minimal. We have covered Algorand extensively over the course of bear market. You can check the videos that we have related to Algo on our channel on YouTube. We also have again, none of the content is financial advice. These are some of the key levels that we have analyzed for Algo based on what it did during the course of the bull market of 2021 as well as bear market of 2022. So the first level at which you can see going back to all the way back to 2019 as well as early 20 and the end of December 2022 till about May of 2023. This is the level where Algo's price was at around 18 cents. The current price, you can see there has been a significant rally above this 20-week moving average and 21-week exponential moving average. The prices, if they close above 13.5 cents, which is again almost 5 cents up higher than the current price, that means the weekly price for Algo could be higher than the bull market support band. That has not been the case ever since about April of 2024. And the first level to watch is the 18.6 cent. The price it is at around 18.14 cents. So that is a key level to watch. If Algo manages to stay above this level, then the secondary level where Algo has spent a considerable amount of time is the price action at around 33 cents. Most of the time during the bear market between June till about November of 2022, the price was between this 32 and 33 cents. That would be the secondary level to watch for Algo. Definitely. And then during the 75 cent level for Algo, at which the price stayed meaningfully during this summer lull of 2021 as well as the bear market correction, early bear market correction at around between February and May of 2022. So the three levels to summarize is the 18 cent level, then the 33 cent level, and then the 75 cent level. These are the three levels of interest. Now we'll focus our attention on the machine learning based price forecast. I know we covered this extensively in the video in the morning. Again, back then the price was beginning to rally but had not breached the 1 standard deviation ceiling for this week. The 1 standard deviation ceiling forecasted by our AI model trained on price action till about November 10th. That 1 standard deviation ceiling for Algo was at around 17.65 cents. The price is above that 17.65 cents at around 18 cents. That means the prices for this week have breached the 1 standard deviation ceiling. Now the key level to watch is this 2 standard deviation ceiling for Algo. Going forward, if the prices manage to exceed the 1 standard deviation ceiling, the theoretical 2 standard deviation ceiling based forecast for Algo is between 19 cents till about 57 cents between now and middle of April of 2025. That would represent in terms of the gains from 18 cents till about 57 cents would be somewhere between 3x and 4x gain from the from the current price point. The 1 standard deviation ceiling, if there is a mean reversion to that level, is between 17 cents and about 25 cents. So that's the positive side of the story. If there is a price correction due to the bear market between now and April, the support is between 7.5 cents and about 14 cents for Algo. This is the machine learning based price forecast, the regression based analysis for Algo. This is the fair value regression trend line for Algo. This is based off polynomial regression function, where in the bear market the regression line goes down with time, whereas in the bull market goes up with time. Again, right now Algo has been in this bullish phase starting about March of 2024. Right now the fair value per this model for Algo is at around 33 cents and 33.22 cents, and that level kind of has a confluence between that level and this yellow line at around 33.34 cents. That is one key level to watch for any mean reversion related trade for Algo. Right now the prices are close to this 2 standard deviation residual again applied to the fair value. That level is currently coming in at around the price action at around 13 cents. If on the other hand the prices have a significant pump in the coming week, the 1 standard deviation residual is at around 20 cents and the fair value for Algo is at around 33 cents. So those are the two levels to look for. You can see this 1 standard deviation residual, that is 1 standard deviation bottom bear market level, has been offering a lot of support during the bear market, but at times whenever the price did go below this 1 standard deviation support, there was either a mean trade back to the mean reversion over here again one time, and then the second time as well as over here in the third time, and exceeded that in the March to April of 2024 rally. You can see the 2 standard deviation residual to the upside, which marked some of the major peaks for Algorand and its token Algo back in November 2021 as well as back in March 2024. That valuation for Algo is at around 84 cents. So almost 85 cent Algo would be considered as a peaking scenario at this point in time. I know this is not the end of the bull run. Again, there is no such thing as a sure thing, but again, the prices at this point in time, for especially for Algorand, don't seem like they are in a major mania phase or any major peak bull run mode. That could change in the future definitely, but again, as this as the prices kind of mature, this 2 standard deviation ceiling should also go higher with time. We do keep making videos related to Algorand every single month or so again, and sometimes in between during the major update. But if you like to follow along on this analytics, all of the data is available on cryptoweeklies.com. The link is on the bottom of your screen, and these charts that we are showing today get updated every single day, at least twice every single day. So you can check them out over here, and not just for Algorand, most of the top 100 cryptos by market cap are discussed over here. Now we'll focus our attention to the 3 accumulation scenarios for Algo and the machine learning based composite bull run target, as well as some strategies based on risk level. Right now the price of Algo is coming at around between 17 cents. That is updated today morning. When the price was close to 17 cents, that represents a risk of about 30%, 70% reward. The key idea with this approach is to avoid dollar cost averaging whenever the risks are kind of elevated. Now you can see over here, whenever the risks are in that low risk regimen for Algo, this avoids again dollar cost averaging during the mania phases. Whenever the risks are higher than 30%, you can see you're essentially avoiding during the blow of tops for Algo. Again, per this model, right now the risk at around 30% represents a decent accumulation zone. Per this model, again, moving forward, it can be used to forecast what could be a theoretical peaking scenario. Per this model, right now the risks are close to 5%, and If they were to go as high as 60% risk, like the Algo usually does during the course of, again you can see over here the green dot represent some of the higher risk levels, and during the some of the blow off top phases of the market, that 60% risk level, the price at that point is corresponding at around 92 cents from the current price of around 18 cents. That represents about a 5x from here. The lofty goal between 92 cents and about $1.19, and some of the stretch is between $1.25 and $1.45. That would represent a risk level in this red dot territory for Algo. This is the SMA based model at around 30% risk. The second model that we have is the dollar cost average model. Again, the same idea with this model is whenever the risk levels are elevated, this is based on the, again, similar regression line that we visited on the weekly level. Instead of a weekly level, this is at a daily level, and DCAing per this model again over a longer period of time where the risk levels are less than, let's say, less than 10% over here. That's when DCAing makes the most sense per this model. Right now the risk associated with the dollar cost averaging of Algo is at around 3% per this model, and this conservative model helps us forecast what could be a theoretical scenario in which the value of Algorand is kind of in the higher risk levels between 0.5 to 0.8. Let's see the price is between 50 cents and about 72 cents, and between 76 cents and 87 cents, that's when the price gets a bit overheated per this model. And we do have a composite model at the end, which is a sum total and as well a weighted estimation of the bull run target based on 3 model. The third model, this is the time weighted average price model. Essentially, whenever the price is below this blue line, that's when the risks are rounded off to 0. They're never 0, but per this model, again, the risks for accumulation for Algo are 0 essentially till price of Algo reaches 47 cents at this point in time. That means if you have a multi-cycle outlook for Algo and you are DCAing below this risk level of 0, whenever the price is below the blue line, eventually you get to see the euphoria phase, and in that euphoria phase the price is significantly higher than this blue line, and again helps estimate what is a theoretical peaking scenario as well. But for all of these 3 models, the estimated bull run peak for Algo right now, again this is not updated, I'll update it right now. Okay, Algo, this model running at around 19 cents current price, representing about 2% risk level on the DCA model that we saw, called as based on the regression risk. Time weighted average price at around 0% risk. The SMA risk at around 30%, rounded off to about 27%. The weighted risk at around 6%. Per this risk reward based model, the bull run peak estimated for Algorand is at around $2.82 for the upcoming bull run of 2025. And in terms of reward, that represents about a 15x from the current price of about 19 cents. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.